Welcome to the Stock Market Morning Prep video for Monday, September 22nd. Hope everybody enjoyed their weekend. On Friday, we had a mixed picture. Dow Jones was up $13.75. NASDAQ down 13. Russell ended up flat, pretty much flat, down 96 cents. And the Russell, which really took it on the chin, down $12.35, down little over 1%. It wasn't a great big move, but it's definitely something we have to keep an eye on. Some of the indicators which I'm going to show you uh, are starting to look like the markets want to go lower. Now, obviously, the markets just continue to grind higher, no volume, but again, price is what pays us, so we have to really keep that in mind as well. But we have a lot of flags coming in, a lot of red flags that are starting to show up in the marketplace, and one is really here, the bullish percent index of the S&P. We had new highs made, and as you can see here, we're already on a sell signal. And if we made new highs like we did back in here, at least the bullish percent was back up here making new highs as well. This is not doing so, as you can see. New highs in the S&P, and we couldn't even break 76%. So this is definitely a red flag, and you want to pay attention to. The advanced decline with volume, I showed this to you last week as well. This is, the internals are breaking down, and that's something that's a big concern of mine. For those of you who are swing trading or building positions for longer term accounts, you have to be careful. Day traders, you still want to know what's going on, but you have to be careful here, because now internals are starting to break down, which includes volume. That's breaking down this 50 percentile. Now we start to move a little bit lower yet again. You see what happens when we start breaking down here. We ended up, this was about 5%, 4%, 4%, and I think this was also 5% the last pullback in August. So you have to be careful, but this is something that we have to pay attention to. Okay, one thing I wanted to show you was the stocks above the 50-day moving average. I've showed this to you before. Markets made new highs, and the stocks above the 50-day moving average couldn't even make new highs, like the last time we had made new highs. So just be careful out there. There's something, looks like there's something brewing. And here's the ITB, a couple emails about lumber, and just want to show you that lumber price is starting to roll over again. It was starting to catch up with price, but now lumber's rolling over. Just be careful with those builders, because if they start to roll over, builders usually follow the lumber prices. Okay, so day trading, totally different, obviously, but if you are looking for a longer-term picture in the builders, I would use caution here, as at least at this moment. We want to let lumber prices start to break back above 24. Let it get ahead of the home construction, and then you should see that follow suit as well. Okay, let's go into the indexes. Now, another obviously canary in the coal mine is the dollar index. Now, as you can see, we had an explosive move for 11 weeks, and now we are just above this longer term weekly resistance area. And we tried it here a little bit, we failed. Here and here we failed again. Now we're back up here again. So we need to pay attention to what the dollar's doing, because if the dollar does break down pretty hard, you will see a bid in a lot of these commodity stocks. And part of the reason why crude oil is at the levels they are is because of the dollar index. So let's keep an eye on that. We might have a nice trade in crude, and even gold for that matter. But gold in itself, I'd like to see gold come down to 1150-ish area. Let me just show you where gold is. We're at 1215, down 70 cents. Here's a weekly chart. But if we can get that right into this 1150, 1100, there's a big band of resistance, support, between 1050 and 1150. You can't see that on a weekly chart here, but something definitely to keep an eye on. I don't think I would be a short seller here. It's been really getting beat up from early August, so I think I'd be a better buyer down below. I let it flush, and then look to pick up some GLD, or you want to pick up gold futures or options. That's something what I'd be looking at here. Crude oil is at its 20-day price channel. Okay, so here is really where the spot has to hold, is at 90.40 again, right up in here. And if that fails, you're going to see a big flush down to the 88 area here. 1272 comes in around 85, 86. So if this does not hold, you'll see a flush down here. And this is where I'd be a huge buyer of crude oil if it were to flush down in this area. Okay. All right, so let's go right back into now some of the indexes. Now we have the bonds. Um, I like bonds, and I think bonds. If we start to roll again, bonds start to catch a bid. As you can see here, we hit both of our targets, the 1272 and 1618, early in August. So I do like bonds, and I think bonds are definitely a trade to look at. Now, if bonds were to break down, let's say right down this area here, 134.13, then I think you have a different picture because we are in a downtrend, right? We are in a short-term downtrend in August, so we are trading counter trend. You have to realize that. So just be careful if you are doing that. Know where your stops are. If you are going to swing trade bonds, you can trade the TLT if you're not trading bonds itself. But you can see bonds are in a downtrend, and we broke out of that downtrend, which is positive. I like to see a little more chop here, but look for an entry, maybe a little bit of a pullback back to the 200. If it breaks really that 135, I would start looking to cut or leaving reducing your share size, and then if ultimately give it an ultimate stop just below this area here, 134.15 in the ZB. But bonds are starting to catch a bid again, so that also tells me that money is likely starting to go into bonds again. Okay, especially when you have this overbought market. Now we have the ES. Now here, as you can see, we rallied for 15, 16 days. We were literally stagnant for about 10, and now we have this bigger candlesticks, as you can see, which tells me that we're starting to get volatility, and that means that the markets are ready to vacate the area now. Which way, we don't know at the moment. So now we're just kind of stuck in this range. Let's see where it goes. We do have moving average support down below 20, 34 to 50, and then of course we have this lower trend channel here. Okay, which coincides nicely with that 1618 that was resistance many months back, and now we're back in this area here. So if you look at the hourly chart just brings us right back into this consolidation channel that we were in pretty much the end of October up into the early part of September, and then we broke down a couple of days and we ran right back up again for 5 days straight. Made new highs on Friday, and now we're starting to roll over. As you can see, we're trading down about 9.25 handles. Some weaker than expected numbers out of Japan, and now it looks like that might be something that the markets might worry about. So let's see what happens. We got the Scottish vote out of the way. We have the Fed meeting out of the way. So now it seems to be either technical trading and of course some key economic data that always comes out during the week. So we have to keep an eye on that as well. But markets made new highs and rolled right over again. So not really too exciting. If we made new highs and we sold off, and held that 2,000 area, that would be a little bit more encouraging for bulls. Now that we broke back down all the way down to this bottom of this channel on an hourly chart, it's not too inviting to looking to start picking up long trades here. Okay, diamonds. What can you say? We broke out. We literally missed it by, I'd say a couple of pennies here. The highs of the 1272, but close enough for government work. We just hit that, barely hit it. Now let's see where we go from here. As you can see, we have a lot of support down here. Excuse me. We have a lot of support here. So diamonds okay, holding up well. This is the canary in the coal mine. This is where what really makes me nervous when it comes to the markets. Aside from even all the indicators, the IWM Russell 2000. Now, I did do some seasonality work, and Russell really comes into seasonal strength October, November, but really kicks in December. Seasonal strength. Now, it doesn't look like it here, and I'm not sure if it will. It just that it doesn't have to happen. But this is not looking too pretty. We had a major engulfing candle reversal to the downside, took out 3 days worth of gains. And again, I showed this on Friday that this was a bear flag here. So let's use caution on this bear flag. Now we're breaking down again. If we take out this 200, we're gonna test this 110 area. Okay, and if that happens, well, then we have to reevaluate. But you can see here, big major distribution with an outside day reversal. This is not good. And if this Russell 2000, which is a good gauge of risk, starts to sell off, you're going to see that the other indices will probably follow suit this time. Okay, again, doesn't have to happen, but the analysis what it's saying is that look for some further movement to the downside in the IWM, which would be the Russell 2000. Now the transports didn't do too well on Friday, but it did manage on low volume. It rolled over, and to me, I think this index is extremely extended. But again, there's really no sign of looking to sell this index, okay, unless you're doing an option strategy, what have you. But this is something that you need a couple more days of evidence to see if we're going to start breaking down. Now, remember, the transports is our leader, so we need to really watch what that does as well, along with the IWM. And then, of course, you have the Qs here. Now, the Qs, the NASDAQ did very, very well and has been doing incredibly well. A lot of strength, but remember I mentioned on Friday, you also have some of the leaders in stocks that were leading this market now starting to roll over. The LinkedIns, the Teslas, the Baidu did well because of the Alibaba IPO on Friday. But watch some of these high flyers, because if they start to roll over, price lines, if they start to really take it on the chin, then that's just another sign that this market may be at least capped for now and putting in a short-term top. So we'll see. Looks like we're getting some volatility, which is definitely going to be welcome, coming off of a very slow summer and obviously a very slow September right now. We really haven't done too much, and stocks aren't moving. So I'd like to see this market start to really pick up some momentum. Either way, to me, it doesn't matter, but it does look like that we might come into some seasonal weakness coming into the end of September and into October, and I think that would be a welcoming factor. If we can get a little bit of a pullback, even again, if it's not a 10% pullback, the 4 or 5% that we've been getting for the last 2 years would be welcome enough that we can then go into a big Santa Claus rally coming into the end of the year. All right, guys, have a great day. Enjoy the day. Hope you have a profitable one, and we'll see you tomorrow. Take care.